Hey everyone, welcome back to Corporate Decoder, the place where we dig into the world of business filings. Today we're looking at Amarin Corporation's preliminary proxy statement, which is basically a sneak peek at what they're planning for their annual shareholder meeting. Hopefully this report can help the stock price because let me tell you, shareholders are not thrilled. First up, we have a letter from the chairman of the board. It's like the opening act of a concert, setting the stage for what's to come. The chairman acknowledges that while they've been working hard to improve the company, the share price hasn't budged, which is increasingly frustrating. They point to some positives like over $200 million in cash and no debt. They also believe their drug AS-EPA is undervalued. They say they're leaving no stone unturned to boost shareholder value. This is corporate speak for, we're looking at all our options, even the ones we don't really want to consider. Next up are the resolutions that shareholders will be voting on. The first few are about re-electing the current board of directors. We're talking about people like Aaron Berg, who is the president and CEO, Patrice Bonfiglio, Paul Cohen, Keith Horn, Odysseus Kostas, Oliver O'Connor, Louis Sterling III. The company has performed badly. Some shareholders get to decide if they want these folks to stay in charge. It's usually pretty standard, but if a company has performed badly, some shareholders get to decide if they want these folks to stay in charge. It's usually pretty standard, but if a company has performed badly, some shareholders get to decide if they want these folks to stay in charge. It's usually pretty standard, but if a company has performed badly, some shareholders get to decide if they want these folks to stay in charge. It's usually pretty standard, but if a company has performed badly, some shareholders might vote against these people to try and shake things up. Then there's a say on pay vote. This is where shareholders get to give their opinion on how much the top executives are getting paid. It's non-binding, meaning the company doesn't have to listen, but it's a good way for shareholders to voice their approval or disapproval of executive compensation. If shareholders vote against it, the company might feel pressured to make some changes. There's also a vote to approve Ernst & Young as the company's auditors. Audits are like financial watchdogs, making sure the company's books are in order. Approving the auditors is usually a routine matter, but it's still an important step in ensuring financial transparency, meaning being honest about your financials. Next, there's a resolution to authorize the board to issue new shares. This is a common request. It gives the board flexibility to raise money if they need it, for example, by selling shares to investors. However, it can also dilute the value of existing shares because a fixed portion divided among more shareholders gives each less of the metaphorical pie. Finally, there's a special resolution about preemption rights. This is a bit technical, but basically, it's about whether existing shareholders get the first chance to buy any new shares the company issues. If preemption rights are displayed, the company can sell new shares to anyone they want without giving existing shareholders a chance to maintain their ownership stake. The company mentions, to be clear, the company has no present plans or proposals to do anything with these. Let's take a quick look at who these directors are. Aaron Berg, as mentioned, is the president and CEO. His background is mostly in marketing and sales within the pharmaceutical industry. Patrice Bonfiglio is the president of Sarissa Capital Management, an investment firm. She's got a lot of experience in operations, finance, and compliance. Dr. Paul Cohen is a professor and cardiologist with a strong background in scientific research and medicine. Keith Horn is the founder of an investment advisory firm with experience in capital markets and operations. Odysseus Kostas is a partner at Sarissa Capital with a background in medicine and investment. Oliver O'Connor is the CEO of the Irish Pharmaceutical Healthcare Association with experience in government, health policy and the pharmaceutical industry. Louis Sterling III is a private investor with experience in investment banking and private equity. Diane Sullivan founded a consulting firm with experience in commercialization and market access for life sciences companies. Checking in on the company's accounting is important. In 2024, Ernst & Young billed Amarin about $1.6 million for audit fees. In 2023, audit fees were closer to $1.8 million, so you could say the company is saving a little bit of money there. Let's talk executive compensation. The report outlines how Amarin pays its top people and the overall aim of their policies: attract and retain executives and link executive compensation to company performance. Let's find out how well they are performing. This statement boasts 9 straight quarters of cash positive operations, icosapent ethyl market leadership in the US, and progress in Europe and the rest of the world, plus 50 million, 4 million in the bank and no debt. What a life, right? They mentioned the market share in the US was 53%, so at least a good amount of people are buying. Here is a nice table. Aaron Berg's salary in the last year was $700,000. But let's not forget that he only became CEO partway through the year. Stephen Ketchum, Jonathan Provost, and Patrick Holt are also mentioned. Jonathan Provost, the chief legal officer, got a tween-free $1,000 bonus. Dr. Stephen Ketchum got $33,290. These bonuses come down to how well these individuals did and if they were on track with the company's strategy. Let's check and see who owns the most shares in the company. Sarissa Capital Management owns 8.08% of the company, which is over 33 million shares. If you didn't know, this is a group that pushes for changes in healthcare companies. It's good that someone with this many shares is keeping an eye on things. Everything in this section is fine, but a few of the execs had some forms that were delivered late. Not a big deal. Finally, the director compensation was pretty standard T. So what's the story here? Amarin is a company in transition. They're facing challenges, but they also have some strengths. They're trying to boost their share price and unlock value for shareholders. One of the risks is increased competition and the risk of not getting approved in time. There's a mixed bag. On one hand, the company has cash, no debt, and market share for it is low, and they're facing some headwinds. The executive team seems to be competent, but they need to deliver results. Thanks for watching. If you found this helpful, please like, comment, and subscribe. Let me know what other company filings you'd like me to decode.